All right, hope everybody's doing well, man. It's been a minute since I've been in front of this camera, and I just feel like it's only right for me to kind of come back and kind of do a video for you guys. It's more like a mastermind, of kind of like the strategy, um, kind of find out what was working and what wasn't working, as well as just some psychology talk before we even get into the actual breakdown of the strategy. But uh, before we get into that, I'm gonna give y'all a little life update. Life has been kind of moving kind of at a crazy pace. If y'all haven't noticed, I am getting married. The wedding is actually, I think, 2.5 weeks from now. So pretty excited about that. A month after that, we are gonna be closing on our house, and then a couple weeks prior from closing on the house, we're actually gonna be going out on a trip as well. So kind of just been a lot of planning, a lot of just it's been so much. Like I never knew how stressful it was to actually plan a wedding. And yeah, it's actually extremely stressful. And I'm blessed. I feel like for me to be at an age that I am and to be in this position, I'm truly grateful for kind of how everything's going. Even though I do feel like it is moving too fast. Things are just happening so fast as such at the same time. But at the end of the day, I'm truly grateful and truly blessed. So that is just my life update there. Um, as far as trading goes, I'll be honest, I haven't been trading for like the past say three weeks. Yeah, roughly 3 weeks. If y'all know or if y'all don't know me yet, if y'all are new to the Discord, uh I've been trading for a while and I trade supply and demand. Um I guess you could call them order blocks, pretty much the same thing. And yeah, that's basically my strategy. I kinda like to go over before we get into all that, from let me see, from last let's start at last November. Um, to now, I have withdrew about 60. Let me see, yeah, like roughly $60,000 in payouts. It would have been another $25,000 on top of that, which would have made it like 80 some thousand dollars, $85,000. If Top Step didn't move me to live on the last day when I was able to request that payout of another max 25K payout. So but if I was able to request that, I would have made this year as of now roughly, yeah, $85,000 in payouts. Again, a lot of the payouts are in the Discord. I don't really post like the smaller payouts. I really post only 10 figure or 5 figure payouts. Because I feel like at the point that I'm at, 2,000, 3,000, $4,000 payouts, they don't mean anything to me. I feel like I have to get 5 figure payouts, and that's the only way that I feel like I did something, so yes, so those are posted there also on my social media as well, so you can see it through there. And yeah, uh, a little psychology talk that I kind of want to talk to you guys about because I feel like this year trading has been it's been a roller coaster. It has not been like any new trader that's trading right now. It's a tough market. It's really tough. And also just kind of like what you guys see on social media. I do want to talk about that too because um I feel like I could have gotten way more payouts this year if I wasn't on social media too much. And what I mean by that is um when I'm on social media, I will see other strategies or I will see other traders, and then I will start to kind of implement certain things that I see on social media to what I had that was working. And I feel like when I started doing that, it kind of put me back to square one because I already had something that works. I already had something that was able to lead me to payouts, to make profits. I already had an edge in the market. But when I started seeing stuff and I started adding certain things to my strategy, that's when things started going downhill. And this is very key because I feel like a lot of times when um when we're trading our strategy and we go through like a losing streak, or we end up or we're finding to feel like it's not working in that moment, we tend to try to change up our strategy, which is really bad because when you do that and then you try that strategy and that doesn't work, then you're gonna keep constantly changing and changing and changing to the point where now you already consume so much information that you don't even know what your edge is in the market. And that's kind of what happened to me this year. I feel like um getting payouts wasn't a hard thing to do, but it was me constantly trying to find and critique my ways of getting to those payouts, and that is what messed me up. So I think this was last month or the beginning of I think beginning of this month, or no, actually last month. I had five Lucid Pro accounts. I had a 10K payout last month, and I was a day away from getting another 10K payout. And that day, I literally I don't know what I did. I did something so stupid. It wasn't even my setup, and then that led me to blow that account. And after I blew that account, I haven't brought any other accounts. I just been sitting back, kind of reflecting. Because there's one thing when you blow account and then you buy more accounts, and there's one thing when you blow account and you really take a step back. Because my goal is to not give back any or a lot of the profits that I made from these payouts. Like, I'm not trying to do that. Like, if I lose an account, I'll probably buy like another set or two, and then after that, if I blow those sets, I'm taking a step back. Because a lot of times when we get these payouts, our confidence is really high, and we feel like we could just buy these accounts, full port them, get them to pass, and then go get another payout. Reality is that's not the case. When you start doing that, you will start going downhill when it comes to actually keeping your profits from your payouts. So um I took I took a step back, and I feel like that really helped me a lot. That kind of helped me kind of, just rethink of what I could have done better, and try to come back fresh, right? Come back fresh to where you don't have a burden behind your mind, constantly thinking about, oh dang, I just lost this account, and then trying to get more accounts to pass. Like, it just doesn't work. You're gonna go downhill when you start doing that. So, and that's what I've been doing. But I feel like I'm good. I'm in a good spot right now to get back into trying to get some more accounts. Just kind of on the fence of what accounts to do right now, but I am in a pretty good mindset spot. I haven't really been on social media. I think you guys probably noticed I haven't really been posting anything. I stopped posting stuff on social media just because I feel like um the shit that y'all see on social media, it's a lot of them are cap. I see so many videos where I'm just like, bro, like that shit just, it don't make sense. And it's crazy to see that a lot of the people that are on social media, like the new traders or whoever that's trying to learn, are falling for a lot of things that they are seeing on social media, which is kind of crazy. And they're also spending a lot of money on things that it won't get them anywhere, right? So that is to say, if y'all are going through a hard time in trading, just understand, bro, this market condition is hard. Like, we are in, like, this is probably one of the toughest years to trade. And just because another trader is doing good doesn't mean you're behind. It just means that maybe your strategy or your edge does not work in this condition at this moment, but it doesn't mean that's not going to work 2 or 3 months later. And if you already had an edge, or you have an edge to where you have made profits, just keep sticking to what you do and don't try to change it up. You could continue to add things to where you feel like it's going to help you, but don't add things to where your strategy becomes completely different. So yeah, but as that is to say though, hopefully y'all have been having a good year. We only have what, like, 4 more months till the year ends. And Q4 is usually where things starts going off. So I know some of y'all that were trading last quarter. Probably that was probably one of the best quarters of last year. Usually at the end of the year, people always say don't trade, but I feel like the last couple months to end out the year usually be the best months to trade. So I'm excited to see what that brings for all of us. And yeah, I'll be back active once I get into the new house and everything. So but as I used to say though, we'll get into the breakdown. This will be like a mastermind, kind of show you guys everything, and we'll do some like live forward testing with FX replay too. And yeah, let's get into the strategy. All right, let's get into the actual breakdown of the strategy, as well as what I've been using or added to my strategy to kind of help me just take the most high probability setups. But if you are new, first thing you need to do if you are getting into trading is you first need to open up a trading view account, and then this is where you look at your charts. Kind of like right here, you can see the charts here, And once you have that, then you need to also have Forex Factory. So Forex Factory is free, but this is where you have to check before you get onto your trading session. You have to see if you have any red folders. Red folders is what you need to avoid, because you never know what price is gonna do. So if hypothetically, if you look at this on Force Factory, you can kind of see that usually there's a lot of yellow folders. You don't need to really worry about the yellow folders. What you need to pay attention to are these red folders. So at 9 a.m. we have red folders here. So I would avoid taking any trades before 9, like kind of like 8:50 ish to 9, or wait till 9 o'clock hits, and then you could take the trade 5-10 minutes after the news played out. So trading view, Forex Factory is what you need when you first get into trading. As far as brokers and stuff, you can find that later on until you actually backtest, forward test your actual strategy and see if it actually is what suits you. Then you could then eventually open up your own, or open up a broker's account and then start trading or trade with prop firms, right? So, but you don't learn that, of course, it's all in the Discord. You can see like the prop firms that I have listed out, and you can kind of go look and see the rules and all that. So that is that. Now as far as strategy goes, I'll be breaking down supply and demand order blocks is actually kind of the same thing. I actually, if I was to actually go back and really look at it, I would actually consider my strategy more of an order block than supply and demand. But again, same thing, right? We're buying from areas where there were aggressive buyers, and we're selling from areas where there's aggressive sellers. And also EMA breakouts, and kind of like what confluences I add to these breakouts, as well as the supply and demand that could help you avoid a lot of losses. So when it comes to demand, pretty much a demand. So let me write this down: demand, and then let me write this out: supply. So this is kind of for anyone that's new. When it comes to demand, ideally you want a strong push to the upside, leaving an imbalance. So basically your imbalance would be somewhere down here, and then ideally you want price to come back here, and then gives you that first candle break or aggressive entry for you to then take buys to the upside. Vice versa, when you're looking for supply, you want aggressive sells, leaving you an imbalance somewhere up here when the selling started, and then you want to wait for price to come back, take that break to the downside. So I'm gonna show you guys how to draw out the zones if you still have a hard time drawing out your zones with the gaps. But yeah, this is very much the idea of supply and demand. And for EMA breakouts, that's something I have to show you guys when it comes to the actual candles. That way you kind of see it better. But that's pretty much the gist of the whole strategy. Now, as far as my checklist goes, I actually kind of added different things to my checklist. So when it comes to checklist, I need a clear DOL, which means a draw on liquidity when it comes to like either the 4 hour or the 1 hour time frame. I haven't really been using sessions like previous session highs or lows. I've been using kind of like just structure, like a swing low or swing high on the 4 hour or the 1 hour, or whichever one that's closest to price. And also what you call it, like equal highs or equal lows. Those are good DOLs, or gaps in the market. Imbalances on the 1 hour or 4 hour. So, or candles with no wicks, like those are good DOLs. So I need a clear DOL and see if price is actually heading towards my DOL. And then once I have my DOL, which is the draw, which ideally where you want price to go towards to on the higher time frame, but you will of course take entries on the lower time frame. Once I have a DOL, I need my moving averages to be in the correct order. So if I'm looking at moving, if y'all are new to the moving average, let me pull this up. So I use the 3 MAs. I use the 13 EMA, the 50 SMA, and the 200 EMA. And ideally, if you are looking for the most highest probability setup and you are looking for buys with the moving average, you want the 13 at the top, 50 middle, 200 bottom. Vice versa, if you are looking for sells, you want the 13 at the bottom, 50 it's always going to be in the middle, and 200 at the top. What does that mean? So let's say if my entry is on the 5 minute, as of right now I'm on the 5 minute time frame. Whenever you have the 13, so my 13 is the blue one, 50 is red, and 200 is the white. You can see how we have the 13, the 50, and the 200 in the exact order that you want to look for buys. Then from there, you can then look for demand setups or breakouts to that to the upside, right? Because we have, not only do we have candles moving to the upside, but we have our moving averages in the same order, which gives you a higher probability of your trade playing out. Whereas vice versa, if you look at cells over here, so look at these cells, you could kind of see um the 200s at the top, 50s at the middle, 13s at the bottom. So then you could then look for your supply setup, which right here, I do see a supply sitting right here, and that would be, a clean sell to the downside. So um what I've been doing lately, or what I am gonna start doing, is only taking setups when the moving averages are lined up in the proper order. If they're not lined up in the proper order and I still see demand setup, ideally I'm not gonna be taking that, just because the chance of that playing out is a lot less than you actually waiting for price to kind of move into your direction. So as you can see right here, we could kind of go back to let's see, 9:30. Actually, before we do that, let's just go over the checklist. So yeah, so I need my moving averages in the right order. And then when it comes to supply and demand, supply and demand, um, you could take aggressive entries, or just keep in mind when you do aggressive entries, your win rate does go down, because a lot of times it could wick out of your zone and then give you that candle break to then go your way. So in this video, to keep it simple, I'm just gonna go over the candle break. So as soon as we get that first tap into the first thing that makes a supply and demand invalid is if a candle closes outside of your zone. So whenever you get a zone, kind of like right here, let's just go over this one real quick. So let's say hypothetically you were looking at the charts here. You see the supply. So how you draw the supply, of course, is you need to see aggressive selling. So let's say there's aggressive selling coming here. You want to draw it from the top of this wick to the previous bullish candle, which is right there. So this is your supply zone. Why is this a valid supply? Is because we also have an imbalance. The gap is from literally here to here. So you kind of see this is the gap that we have in this market, where price needs to come and balance it, or come balance it out, and ideally you could then look for a setup there. But as you can see, when price do come to your zone, you could see, so this, when I see this is not invalid yet, because this could just be a liquidity grab and then get that first candle break to the downside. So see how we had a bearish candle closure, still respecting the zone. I would take this first candle break, or whatever first candle break that happens, but as you can see right here, we get a closure to the upside outside of the zone, which made the zone invalid. So this would be invalid setup. So that's what I mean by invalid setups. So whenever your zone does that, you have to move on, kind of look for a different setup. So supply and demand, when it taps into your zone, I'm taking that first candle break to whatever direction that I'm looking at. So if it's a demand and it comes back to the zone, and I get that first candle break to the upside, I'm in that entry for buys. Now, if vice versa, if it's in a supply setup and I get that first candle break, I'm taking that sell to the downside. But if candles closes, actually, let me just delete this. If candle closes outside of your zone, that zone is invalid. You cannot take that setup no more. But yeah, this is pretty much my checklist. As for EMA breakouts, I need the moving averages. Move this. I need moving averages in the correct order, which is what I put above there. And also I need it to come off of a double bottom, or double top, or bouncing off of EMAs, or grabbing liquidity before the breakout. So what does that mean? Let me actually make this a little bit smaller. Okay, so let's turn back on the EMAs. And first things first, we'll go over EMA breakouts after supply and demand, because ideally that's more of a bread and butter to me. So as you look at supply and demand setups, the reason why I feel like the moving averages are good is because it tells you what price wants to do, right? So you can see throughout all of New York today, we were just chopping around, and let's say hypothetically, if you were to, let's go to 9:30. So this was the supply zone that I had before, and of course price came back to the zone. Now, whenever you have the moving averages, it's giving you kind of like a story beforehand if you should be taking this setup or not. So as you can see at this supply, if you were to take a sell here, you're selling right into the 200, the 50, and the 13. So ideally, this is not where you want to be selling. You actually want your supply zone to be somewhere down here and then down here, and then you could then look for sells because we're under it. Now, if you look at the supply zone, we are above all the moving averages. This is a sign for you to actually stay out of this trade because price could then come down and then bounce right off of these strong levels. These EMAs and SMAs are magnets in the market, and they are good levels that prices tend to do bounce off of. So that's one way you could avoid a loss when you are looking at supply and demand. Also, whenever you see like supply and demand in this type of condition, just look at the EMAs. EMAs are not lining up. This does not look good at all. So you want strong momentum of the EMAs moving a certain direction to then eventually take your setup. So when you see stuff like this is what you want to stay out of. Now let's say we keep playing forward now after 9:30 open. So let's see. So we can still see that price is still not doing anything, right? Because EMAs are not in the right order flow. So then you then move this up. You keep going, keep going. You see, even if we had a demand here, I wouldn't take this demand because why? You have a 13 right here, the 200s in the middle, the 50s at the bottom. These are not in the right order as what we stated up here. You need 13 at the top, 50 in the middle, and 200 at the bottom. So if we play this out again, right? Still nothing. Still nothing. Like imagine if you took this demand right here and you were to get in aggressively. If you were to take this demand and you get in aggressively, look at the E maze. Let's play this out. You see how the 13s at the top, 200s in the middle, 50s at the bottom? That's not in the right order. So whenever you do that, ideally you already decreasing your chance of winning the setup. So now if we continue to keep waiting, so we keep waiting. Okay, keep waiting. So this would have been a nice supply if it actually held because you could kind of see the 200s at the top, 50s in the middle, 13s at the bottom. But as you can see right here, we had that candle tap and then it broke out of the zone. So this zone was invalid. You wouldn't even have any entries there unless you tried to do aggressive entries. But again, that's why I say ideally if you are new and you don't have the discretion to kind of see where price could aggressively move from, then just wait for that first candle break. So that zone became invalid. Now let's keep playing this out. So now we're playing this out. So now boom, we are seeing um structure moving to the upside. We are seeing the 1350 and 200 in the same order. Now we just need to see some clear displacement to the upside that could create that demand setup. So let's play this out. So we are still here, and then boom. This ideally right here, this is a sign for me to get into a setup since we do have a demand. So you can see how we broke multiple structure to the upside. We closed body above this level right here and over here too. So we breaking out to the upside. Now, where's the demand? The demand would be the bearish candle before the move. So I would draw my candle, my zone from this bearish candle wick to the bottom of this area. And this is where my demand is at. Now, why would I draw this zone here? Because there's also a gap from here to here. This is where the gap was when price left the zone. So now you could kind of put your confluence together. We have 13, 50, 200 in the same order. We have a demand breaking and closing above all these structure. And if you look at the 1 hour time frame, right? If you look at DOL, um, at this point, our clearest draw of liquidity or where price could head towards is these highs right here. So this is the 1 hour high. You look at the 4 hour time frame, you kind of see we could definitely come up here to retest. So I usually for my deal, I usually just look at like swing points or levels where price could for sure hit. So this would be a level that I want price to go towards. Again, a lot of times you could try to hold to your DOL, but again, if you don't want to hold and you just want to take your, like a quick trade, like a quick 1-to-1, then you can also do that as well. So as you can see right here, we have this candle break I mean, this candle closing above all these structure, which is also telling you that we are changing character to the upside. We're breaking structure to the upside. Then once price comes back to the zone, you see how we come back to the zone, and then we have a strong or a good bullish candle closing here. So now that once price tap your zone, all you're waiting for now is just that first candle break. So if I want to enter this trade, I want to take that first candle break of whatever candle that happened in the zone. So let's play this out. And then from there, this will have been my entry. I will have taken this candle break here. Stop loss right below this swing. And then again, you can then target your levels. So let's see if this played out. Let's see. Yep. So you can see how me adding DOL as well as the moving averages, um, you know, could actually help you guys out a lot instead of just taking any supply and demand setups, because there's always going to be supply and demand zones that are presented, but are your EMAs lined up? Do you have any clear levels that price could for sure hit? And if you don't have those, ideally you're just trading a random supply and demand zone that you don't know where it really wants to go towards. But when you have the 13, 50, and the 200 in the same order, you look at the 1 hour time frame, you see that price is heading towards these highs here. And this is the closest high that price is going towards. So ideally that could be a good target. And as you can see, price played out for this would have been a 1 to 3. And of course it went for more. And when I mean 1 to 3, if you are new, basically just means if you risk 1,000, you make 3,000. You risk 2,000, you make 6,000, right? And something I do want to show you guys when it comes to calculating the right risk. So all you got to do is open up your long and short tool, and you can find those on the left side here. You can find your long, short tool. Long tool is basically your, if you're looking for buys. Short, you're looking for sells. When you guys use these tools, all you gotta do is really just click on the tool and do your customized risk. So let's say I want to risk 500 per trade. I'll just put the risk as USD 500, and then for sells, I want to risk 500. So how it works is this also helps you guys with your contract size. So let's say I enter this trade down here. So let me just replay this. So let's say before I get into this trade and I set my buy stops here, you can see that when I move this, you can see the number right here. Like you see where it says 1.5, and then it goes to 1.4, then it goes to 1. So if I have my stop loss right here, it says 2.439. That means I could use, if I use 2.4 contracts, which you can't because it's futures, that would be me risking 500. So if I see 2.4, I'll be risking 3 contracts, right? I'll just round it up. So 3 contracts, a little bit over 500. But this is basically how you know how much you want to risk. So let's say hypothetically, if I want to risk 1,000 on this trade, if I risk 1,000, you can see my contract goes up to 4.8, which I'll be using 5 contracts. And this is where my stop loss is. So if price comes down here, this is, it takes me out here, I'll lose, $1,000. But if price runs, then I can make 3.44 RR, which means it's more than a 1 to 3 RR. So if I risk 1,000, I can make 3.5 or almost close to 4,000, right? Somewhere up here. But that's just how you use your tools. So when you have your tools, and a lot of people still have a hard time calculating their contract sizes, just use the tool. Like let's say you want to risk 800 again. Let's say 800 for this buy position. You want your stop loss. Let's say your stop loss is down here. So you can see where it says 1.4. So ideally, I'll probably use 2 contracts here. If I use 2 contracts, I'm risking a little more than $800. If price come all the way down here and takes me out. But if price runs up to here, this is a 1.3 RR. So I'll make more than $800 if price hits our TP. And then if you go longer, you could kind of see how this says 2. So now if this is your target, whatever you risk here, this would be how much you would just double it, and that's how much you make up here. So that's how you use the tool. I know a lot of people will be like, oh, just calculate the points. Why? Like, you literally use a tool. It's really simple, and it gives you, an idea of what price, what contract you should be using. So yeah, you can kind of see like this is literally what I'm talking about when it comes to taking a good supply or demand zones. Just having more confluences stacked together. But yeah, oh, let me move that back. Yeah, and then of course, when it comes to supply and demand, you do want a break of structure. So the break of structure is really important because that's telling you that we are potentially going that way. That price don't want to go any lower. Now, so that's the demand setup. Now let's look at a supply setup. So let's say supply, they haven't really been on the charts in a minute. So let's say, okay, so I would want to use this, but it might be kind of too complex. Um, let's see. All right, cool. So we do this one right here. Let's do this one here. So if you're looking at this on the 5 minute time frame, we can see that we have a supply. If you are having a hard time seeing breaking structure, turn on the line chart. You can see that we're breaking structure to the downside. So we are breaking structure. Again, we have aggressive selling. You can see there's 3 strong bearish candles to the downside. Where are your EMAs? Your 200s at the top, 50 in the middle, 13 at the bottom. This is the setup. This is the lineup that you want to be in. So now we have the moving averages all lined up. We have a strong supply setup. So how you want to draw the supplies? You want to draw from the wick of the where the selling started, and then that whole bullish candle. So you see that whole bullish candle down to here. Start from this the wick of where it sells down to this bullish candle, and this is your supply. And also, when you draw out these supplies, you want to see if there's a gap. So you can see right here, we have a gap from here to here. So this is where the imbalance is at, right? So price should be able to come back in there. And then if it gives you your entry, that's where you look for yourselves. Now that we have that, now let's go to the 1 hour or the 4 hour time frame. Let me move this out the way. And what are your clearest levels of DOL? So if you look at the 1 hour time frame, I mean the 4 hour time frame, what I can see is we are pushing down. We're we're going towards these wicks, right? A lot of these wicks are gonna get taken out. So ideally, I would just mark the most nearest wick that we have, which is right here. So that would be my DOL on the 4 hour time frame. Now let's go to the 1 hour time frame. This is a clean level because this was once where we had buyers come up, aggressive buying come up. So this is a good swing point where price could then target down. As you can see, price is definitely heading towards this level. So ideally, you want to keep going that direction. So we look at the 5 minute time frame. We have this low. This is our draw on liquidity on the 1 hour, the 4 hour time frame, and also we have a supply in this direction as well with the EMAs lined up. So let's play this out. So prices as comes to your zone. Now I still would not look for buys. Why? Because again, what is price telling you? We have a clear draw on liquidity, which is on the 1 hour time. You can see we have a long wick to the downside. This is obviously is going to get swept out. And then also we look at the 5 minute time frame. Overall structure is going down. We are all our EMAs are going the same direction. So then we'll just wait for that first candle break. So we still don't have a candle break yet. This is where that candle break happened. So you see how we are still respecting the zone. This would be where you would take that first candle break. Stop loss would be right above this swing here or this level. And then of course you ideally want to target your DOL, which is down there. So you can kind of see how when you pair the 4 hour time frame and the 1 hour time frame, and if you don't see nothing on the 4 hour, that's fine. Go to the 1 hour time frame and see which way price is gravitating towards, and if you have a clear level. So I usually look at the swing levels or higher lows, higher highs, whatever the case is, right? So you can see right there we have this strong wick, and I want to see if price eventually do come down and take out this wick, because these are just resting orders, resting stop losses sitting down here. So as you can see, this trade then played all the way down. If you were to mark out these wicks here, you could then see price, of course, took both of those out. So just from here to this first level of your draw and liquidity, this was a 1 to 4 with no drawdown, pretty much, right? And then from here, if you was to hold it down to here, this would have been a 1 to 5, and of course, the rest goes on. So having a clear draw on liquidity, plus your moving averages lined up together, and then you have a valid supply or demand zone, that's usually how you're gonna take the most high quality setups. Now, when it comes to like you see up here, like the old me, up here, I would look at this as a supply right here because we had a strong push down, and then we have an imbalance here and price comes here. But then look at what happened, right? When you the well actually this trade played out. I'm not gonna lie, this actually played out. So this would have been your first candle break, and then this would have been your entry. But you have to ask yourself, like, does it make sense for me to take this setup? Because you're buying into a 13, a 200, and a 50. So you see how when you compare both setups, let's look at this setup and this setup, which one just looks better? right? Look at this one. Look at how messy the EMAs are. And look at this one. We're just flowing, right? So all EMAs are flowing. Compared to this one, all EMAs don't know what's going on. So either price could go down or it could go up. In this case, of course, it went down. It played out. But the chance of that happening all the time is not going to, it's just not going to happen because price usually bounces off of these moving averages. So wait for so going back to taking the highest quality setups, wait for your moving averages to all be in the same order. Of course, find your supply or demand zones. Make sure it's a valid zone, and then make sure you have a clear draw of where price is wanting to go to. Right. So as you can see right here, the price, we already found our clear draw. EMAs are lined up. Good supply zone. Boom. Take that sell. Right. Kind of again. Let's go over to another setup. Um, so there's no demands there. So that was a supply setup. Kind of. Let's see if we have any more setups. So you can see like all of this right here. Like this, I wouldn't be trading. Like this was actually London right here. London started here, but again, this I wouldn't take this demand because again, look at the EMAs. We are just it just don't look good, right? Whenever you see stuff like this, um, the market doesn't know what it wants to do because it can either go past these emails or it can either respect it. And in this case, this demand got invalidated because it actually respected these EMAs and then started flushing down. So this is something that is very important if you are using these moving averages. It just wait for them to be in the right order and then see if it gives you your setup and then see if you have any clear levels that price wants to go to. You can kind of see right here. So this is really nice. So you can see how we have a strong push to the downside, right? EMAs are in the right order, 200 at the top, 50 in the middle, 13 at the bottom. So we have a good level of supply right here. So why is this a nice supply? Strong move to the downside, turn on the line chart, you can see breaking structure. And then we have a supply sitting right here at this bullish candle, the whole bullish candle area. So this is our supply. Where's our gap? Our gap is literally from here to here. So that's our gap. So ideally you want price to come back into here and then you'll look for your setup. So now that we understand that, let's look at the 4-hour time frame. Let me just remove these out the way. So we look at the 4-hour time frame and we look at this 4-hour candle. Where is the nearest level that price wants to basically hit, right? So you can see right here we have this 4-hour wick. It's a long wick. Ideally, price is coming down to here. We ideally probably gonna take out this wick. We go to the 1-hour time frame. Yep, this again, look what price is doing, right? We're heading towards this wick here. Now, ideally, I would love to target something down here, but again, you just never know if price gonna go down there, right? So you kind of just want to take what is the closest areas to your to where price is currently at. So let's go back to the 5-minute time frame. We have this wick right here. This is a previous 4-hour wick. Ideally, price looks like it wants to take that out. So wait for price to come back. So now you see how we came back to our zone. Candle respected it. Now wait for that first candle break. This will have been your first candle break. And then, of course, stop loss would be above the swing. And then you could then target your previous 4-hour wick. And then you can see price played out. And just like that. So I want to see if price, I don't think, so once price takes out this level, so you see how we took out that previous 4-hour long wick. That was my draw on liquidity, and this was a 1 to 2. I don't know if price plays. Let's see what price does. Yeah, so it didn't go um all the way down like that, but again, right? So once you take out a clear DOL, you could expect price to either chop around or reverse. So that's why when you look at DOLs, you want to take the one that's the most obvious and the ones that the price is definitely going to be hitting that area, right? So again, this is a 1 to 2. You can catch 1 to 2s, 1 to 1s consistently. You will be profitable. You will be able to get payouts, whatever the case is, right? Whatever you want to do with that. But yeah, that's pretty much what that is as far as supply and demand. Now let's go to our EMA breakouts. So when it comes to EMA breakouts, oh, and also keep in mind a lot of my entries are on the 5-minute and the 1-minute time frame. I usually don't take trades out the 15 or the 1 hour, just 5 and 1 minute. Now when it comes to EMA breakouts, ideally you probably want to just take those on the 5-minute time frame, just because it's it's a higher chance of you not getting faked out because on the 1 minute there could be a lot of noise and ideally you probably know which setup to actually take. So we're on the 5 minute time frame. Again, when it comes to EMA breakouts, we need moving averages to be in the same order, right? So let's say this is London. London's at 3. So let's say London is right here. So EMA breakout is ideally you just want to take that candle closure that closes below the 13 EMA. So let's say in a sell model, let's look at sell EMA breakout. You want the moving averages. Let's see. You want the moving averages to be 200 at the top, 50 middle, 13 bottom. So as you can see right here, we have the 200 at the top, 50 in the middle, 13 at the bottom. So ideally, you can either look, if we don't look at supplier demand, right, we'll just look for breakouts. So let's play this out. Okay, so you see how we have that first candle closure below this 13. Now, why is this a good EMA breakout? Because we're at a double top, right? So you can see how price is respecting this level. We're creating like a double top formation, and then price comes down, right? Also, we also took out liquidity. So when price push up here, we took out these highs, these highs. So this is a double top formation with liquidity being taken out. First candle closure, strong candle closure to the downside. This would be your entry as soon as the candle closes. Then your stop loss would be right above the 5 minute candle, and then you could then target your levels, right? So basically, when it comes to EMA breakouts, you want price to either come from a double bottom or double top, liquidity being grabbed before, or bouncing off of a strong moving average. So you can see when this candle closed, we respect off of this 50. Good closure, take the break. So when it comes to breakouts, you want that 5 minute candle that you take that entry off of, you want your stop loss to be right above or below that candle, depending on what setups you take. So that's a sell breakout when it comes to that. Let's go to even there's another setup. Let's see. There's EMA breakouts happen. Now, when it comes to EMA breakouts, when your conditions look like this, where your EMAs are not in the correct order, this is where you want to avoid and wait till price actually plays out, right? So as you can see, let's say all this noise right here, you don't get an EMA breakout just yet. But let's say over here, if you was to take an EMA breakout, you could kind of see that price respected here. Double, you're creating a resistance right here. So price respected here. Then we had a strong closure to the downside. This will have been your entry right here. Stop loss at the current 5 minute candle off the entry. And then if you were to hold this trade, it went for like a 1 to 3 or almost a 1 to 3. But if you were to just target these lows here, then ideally, you could then take that setup as well. So you want your moving averages to be in the same order, coming from a double top or double bottom, as well as liquidity. So you can see right here, not only was this a double top, but you also had this long wick coming up to grab liquidity on these highs over here. So imagine you had stop loss sitting right here. This candle came up, took out these highs, and then gave you more confluence to then take price to the downside. So that's basically the EMA breakout for sells. Let's look at buys. So something that I want y'all to really pay attention to when it comes to like a buy setup. So let's say I get on the charts right here. So okay, this is 3 o'clock. Okay, so let's play this out at 3 o'clock. So when it comes to that's sell breakouts. Now when it comes to buy EMA breakouts, you want the 13 at the you want the moving averages. You want the 200 at the bottom, 50 middle, 13 top. So that would be how you want when you look for buys. So you can see whenever 13 at the top, 50 in the middle, 200 at the bottom, this is ideally where you want to look for EMA breakouts. So as you can see right here, let's play this out. This is when London opens. We don't have anything really. Price disrespected this demand, so nothing much. And then you can see how we had this first closure here. So this is nice because the thing when it comes to this setup is that you're not really coming from a double bottom, but you're grabbing liquidity, right? You're taking out these lows here, then you're taking out these lows here. And also you're bouncing off of the 50 SMA. So this is giving you confluence to then take your buys here and your stop loss right here. And then you can then target your, your one to one. And then you can see this trade played out for your one to one in literally 5 minutes. So if you don't see price coming from a double top or a double bottom or grabbing liquidity, if it's bouncing off from like a 50 or a 200, if the 200 is pretty close here, this gives you more confluence that price wants to push up higher. So that's one setup on the buy breakout. Now you see how like right here, you see how we had a closure above. I wouldn't take this because look at where the EMAs are at. You have the 50 above the 13, the 200. So this is just not in the right order. So by taking setups that are in the right order, that's gonna give you a higher chance of actually winning your trades. So let's keep going. Um, so let's go here. So I'm just showing y'all examples of these setups. So you can see like right here, even I guess you could count this as a double bottom, right? You are bouncing over here, and then but what really is important on this setup is you're bouncing off of the 52. So when you're off the 50 plus some kind of liquidity, you could tell this wick grabbed these lows. It didn't take out these lows. It would be nice if it took out these lows, but it didn't. And then you could then target your one to one, which is right there. Your one to one's hitting in 5 minutes. Same thing over here. You see how I wouldn't take any of this breakout because why? EMAs are not lined up. So you can see if we just play this out, it just never got to the point where it looked good, So now it looks good to then take buys, right? But again, you just have to wait for that. Or if you don't see a demand, you could then look for, you know, for buys. And same thing right here. This one's really nice too. So why would I not take this one? This was the first. This was the first closure above because we're not coming from a double bottom. So you can see how this level is down here and this level is up here. So we're candles are not coming down here showing that we're creating an actual double bottom, as well as there's no liquidity. Like we never took out liquidity here. There hasn't been any liquidity. 50 SMA is down here. So we're not bouncing off the 50. No liquidity grab. And there's actually no candles actually coming down here and actually creating like that double formation, So um that I guess I don't know. I guess it would have played out for 1-1, but then eventually it stopped out. And then now you can see this next move. So this was a setup that you ideally want to take. Why? Because now we are actually coming down to these areas to retest as a double bottom, grabbing liquidity over here. So we took out some form of liquidity, creating actual double bottom, and then strong displacement candle. So this is ideally where you want to take this trade, and then your stop loss would be, your target would be, let's say, a 1-1, and as you can see, this trade played out. So understanding double bottoms, double tops, liquidity will give you a higher chance of winning a setup when you are taking these EMA breakouts. Now, when you're taking these breakouts, you want a strong candle closure. You don't want like a tiny candle. Like if this was a tiny bullish candle closing above, I wouldn't take that. I want a strong candle closing above. Um, and then let's go to yeah. So look at this setup. This is something I want to go over too. So you see how this we get that first candle closure above. Um, we didn't grab any liquidity. We're not coming from a double bottom. So ideally, if we want a setup here, I would want like a double bottom to form like somewhere down here. So price comes down here, respect this level, then close back above the 13 to then look for buys. And we really don't have any significant liquidity being grabbed. So when it comes to like these first setups that y'all see like this is not a good setup. So now I still wouldn't take this setup because why? We never really came back to come down to retest this level to then continue to push higher. But of course, this was also a demand. You can see this was a demand sitting right here. And then so let's hypothetically go over this demand real quick. So EMAs are in the right order. Right, I do see price coming down, and then we start pushing up. So we're technically breaking structure. This should be a break of structure. Yep, we're breaking structure. So we're closing above here. We have a gap sitting somewhere right here to right here. So now we want to wait price to come into here to then look for the buys to the upside. Now let's look at the 4-hour and the 1-hour time frame. Let's see if we have any good draws to the upside. So right now we don't have anything on the 1 hour. I mean the 4 hour. I do see if I look to the left, I do see this level up here. This is a good level that we have this high just sitting right here, so we could definitely come up to there. Let's see if the 1 hour gives us anything closer. Nope, that would actually just be our our target. To be honest, these highs over there. So then down here, we see up there, and 15 minute, cool. So we have basically have higher time frame, um, draws where price looks like it wants to go to. So this will have been your entry, first candle break, and then your stop loss down here. And let's see if it actually do play out. Let's see. Okay, so we're pushing higher, we're going higher, going higher. At this point, I wouldn't be holding this trade, but yeah, this would be at this point you're already holding it for too long. But again, if you're not targeting higher time frame draws on liquidity, you can still just target your 1 to 1 or your 1 to 2, and that's really all you need to get out of this trade, right? But when you have like a direction where you where price looks like it wants to go towards, you have a higher chance of winning that setup. So and this would have been a nice trade too. But yeah, that's pretty much kind of everything of how the strategy works when it comes to taking multiple kinds of setup. Um, and yeah, see how when the price is just in the right direction, you just tend to get better structure to that direction. You just have a better trade overall. When the EMAs and the moving average are not in the right order and you don't have a clear draw on liquidity, then ideally you're probably your subs is probably going to take either too long to play out or it just won't play out at all. So yeah, but that's pretty much kind of what I have. Kind of like right here, let's go over, like I see email breakouts everywhere. But ideally you want to filter out the ones that gives you the highest probability, right? So this was actually London, so you could kind of see how where we have a level down here where price is rejecting from, came down, swept these lows here, didn't tap into this demand, but we swept these lows, so we have liquidity bouncing off the 50, uh, at a double bottom, strong closure to the upside. This will have been your buy, and then your stop loss would be right below there, and then again you would target your 1 to 1. If you could really just really be consistent with 1 to 1s, you will make a lot of money. So so then boom, that'll be your 1 to 1 literally in 5 minutes. Boom, then you basically caught how many points? 20. You caught 20 points. So if you use let's say $1,000 risk here, if you use 2.5 or let's say 3 contracts here, you would have made $1,000 in 5 minutes. So that's the power of adding multiple confluence and with your moving averages in the same order. So yeah, that's something I kind of want y'all to go over. Pay attention to your moving averages. Make sure they are in the right order, and also go on to the 4 hour and the 1 hour time frame to kind of understand uh which way price is heading towards, right? So if you don't have any draws to the upside, and ideally what you could look for is like a 4 hour 1 hour unfilled gap to the downside, and you could target those levels, right? So there are different ways that you could find your draws, but ideally you want the most obvious draws on liquidity. But yeah, that's pretty much kind of all I have for you guys. And yeah, hopefully y'all learned something in this video. All right, now that you guys know what strategies I use, let's actually apply that into our back testing video. So we start off with 50,000. Just do NQ. Start date. Do I do random? 2012? No. This should do January 1st to now. Let's create this session. See, New York. Indicator triple moving average. Let's change this. 13 5200. Let's change the color. White. All right. Let's go to next session. Let's put this here. All right. So this is Thursday. So I usually just look at the 5, kind of see if we have any setups, any demand setups or breakout. So usually when the 5 is displacing like this, you could definitely look at the 1 minute. I'll mark out this demand here, just in case that we do come back down there. Let's see. Okay, so alright, so I do see this order block right here. See where we're at. Okay, so if I was to look at this, definitely I want to target somewhere up here, because that's the 1 hour price high. I'm liking this setup a lot. Strong candle. We're just displacing higher. Yeah, let's go for a 1-to-1. Still order. Still market. So it's 2,000. Nice. Okay, cool. So yeah, super clean. I want to see how far we run. Okay, we are running up. Wow. Imagine if you hold this straight. Yeah, that's crazy. But yeah, just clean level on the 1 hour. You kind of see we're kind of recovering here to take out, these highs. So usually wherever we draw towards is kind of where I want to go with. What is this? This is London, Friday. This wick right here on the 4 hour, definitely. We are changing character too. So you kind of see this is pretty much you're changing, you're breaking structure, you're actually closing body. Super bullish. We are still respecting this demand. You could kind of see price came back down, respected this demand. Closure. This is a trade that I am definitely taking. Let's just go for a 1-to-1. Again, when you take closure or breakouts, you want the candle fully closed. That would be where it closes. Save this. Nice. Okay. Let's see if it. Wow. Yep. Beautiful. Beautiful. So we're already up 4,000. Let's go to the next session. What's this? Friday? Yeah, I don't know about Fridays. Okay, so this is 10. Let me see. We're definitely seeing these levels here. So it's 5 minutes super bearish. So you gotta look at the 1 minute. Okay. Oh snap. Let me just see what the 5. Come on. Can we get, yeah. That day's cooked. Alright, so we are here. See. So this trade, this is a nice breakout. The only thing is, I don't have any draws. Do like that we are respecting that. We just play it out. Okay, yeah, there was no wicks. This one, this looks good. But you know what? I'm not gonna take that. Yeah, they just don't look good. We just are super choppy. Okay. We are displacing higher. I do see this 1 hour order block potentially go up to there. No. See, like this breakout right here, it's not coming from any double bottom or liquidity grab, so this is not a good breakout. But if we do respect here, see. Okay, never mind. Okay. I actually do like this. I like this wick right there. Coming out the 50 SMA. Strong closure. Yeah, let's take this trade right here. Stops right there. And then 101. Execute. Beautiful. And do we actually do? Yep, we do. Cool. So, next session. Okay. All right. What day is this? Monday? Yeah, nah, it's too late. Alright, we're up 6,000. We are on the 5th. Okay, let's play this out. What are we doing? One hour. Let's see. Okay, so I do see this 1 hour unfilled gap here. There's a demand right here. Okay, so looking at this candle, I wouldn't want to take it, but we had the break. So in live markets, I would have taken this trade. This would have been stops. This would have been 1-to-1. So in live markets, I would have taken this. So let's play this out. Okay, nice. Yep, so we tap into that imbalance. Clean, super clean. Let's go to next session. Alright, let's play this out. Okay, we are going lower. Let's look at the 1 minute. And the only reason why I hop onto the 1 minute is because the way prices just melting. Okay, we are literally melting. I don't like this. Don't. Yeah, nah. Next session. Whoa, 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 whoa. Yeah, nah. Next session. Alright, a lot of consolidation, breaking down. Yo, what day is this? Tuesday? Okay. Do we see this 1 hour imbalance? 5 minute is. There is a supply. I go short. Thing is, we are just pretty bullish. I'm just play this out. Okay, well that played out. Okay, so that trade did play out for a 1-to-1, but I didn't like it, just how bullish we were. Oh, definitely going lower. You can see price come down to here. 50 is above 13. Clean breakout. Stops right there. This would be my 1-to-1. I like this because we have double top, took out liquidity. This is a clean trade. I would definitely hold on to this, but okay, clean. They already up 10. It's already the 7th. All right, next session. Okay, 1 minute. We have this wick here. It's a nice draw. I do see a 1 minute demand. If we get this closure, or we get this break, I would be in this trade. And 1-to-1 stops. Let's see. Oh. Oh. Okay, nice. Well, that was kind of crazy. But you can kind of see we have this swing center right here. So ideally I wanted that to get hit. And then once it takes it out, then you can see the reversal. Pretty good. This month is actually, this is January. Kind of fire. We 1, 2, 3, 4, 5, 6 trades. Let's go to 5 minute. Too choppy. Alright, displacing lower. I would love to see this area get taken out. 1 minute. Yeah, we definitely coming down. So no supply. Do like this setup because we are respecting here. Closing below 13. Let's take the short right here. Then a 1-to-1. Put this here. Alright, let's see. This would be market. See what we do. See this. Wait, why is it doing this? See. Oh wow. Okay. So one lost. Let's go to next session. Thursday, there's nothing. Yeah, next session. Okay. Definitely like we're gonna take out these lows here. It might just do that. So there was this 1 minute supply. We tapped this candle, tapped, broke this candle low. I'll be in this trade right here. Just because we have clean draws. Stop loss right above that candle. Let's see. And we also have another wick on this side here. Yeah, I'm gonna take this. Market. Nice. Clean, clean. Alright, cool. Let's go to the next session. We're up 13. Bandos. Bandos. Alright, 5 minute. Going lower. Yeah. Nah. Alright, let's play this out. Emails are not in, just, it's terrible. 1 minute. Probably could have got something on the 1 minute. Oh, this was nice. Wow. Okay. What? What? 1 hour. Yo, these setups are crazy. Alright, next session. Let's play this out. Nah. Yeah, nah. Next session. Alright, so 5 minute. So literally all I'm doing is just on the 5 minute time frame. Kind of just seeing what price is drawing towards. And I'll check the 1 hour. I do like this wick. Right there. 1 minute. Let's see. .5 minute. Yeah. Next session. We are on the 12th. I'm probably gonna stop this in like the next. Let's see. Oh wow. Yo. Yo. Okay. Next session. That day was pretty cooked. So 5 minute. All I'm looking for is some kind of setup. What? Yeah, no. Okay. 200. I think the 200 EMA is messed up on here. But just looking at this structure, I think we could definitely come out, take out this high here. 4 hour. Um. Bouncing off the 50. I don't know. I don't like the consolidation. Yep, yep. Okay. So yeah, whenever we consolidate like that, it's usually kind of risky. Ooh. Okay, never mind. Yo, what? This shit is cooked. Alright. Let's lock in. So we're up $13,000. I don't know where this break even came from, but one loss. Let's see. See, we'll get to 20,000. Yo, that's cut. All right. Okay. Supply. Supply right there. It's a lot of wicks to the downside, but ideally, I think we could definitely target. Nope, the zone got disrespected. Email's not lined up. Ooh, okay, yeah. This supply right here. Wow. Okay, cool. Let's go to the next session. What the fuck? Okay. Yo. Okay. Supply right here. We are looking. I don't know. This, what time is this? Okay, let's see what the next candle. Yeah, this was the trade, but it was kind of late into the session, so wow. Okay, cool. Let's go to the next session. Oh, this chop is bad. Yeah. We'll go to next. We're on the 15th. Yeah, I'm taking this. See, 1 hour. Yeah. D swings over here. This is just a strong candle. Took out liquidity down here. Yeah, I'm taking that. There's no way I'm not taking this. 1 to 1. Order. Okay, and yep, we delivered. Cool.